Hey everyone, welcome back to Stock Talk with your host George DeMaso, myself. Um, let's get right into it because I got a lot to cover um, in the time that we have had our last show till now. So obviously everyone knows that the coronavirus has taken a huge toll on not only our health but the private sectors, public sectors, every market. It's taken a huge toll on the European market, the Asian market, the American market. Literally anywhere in the world that has been hit by the corona has been hit in multiple places, not only health wise, but economically. So that's a huge step into what I'm going to go into. Um, I could just sit here and talk to you guys about how the S&P 500 has fallen and how the Dow Jones has fallen, and talk to you about the stocks that are directly related with that, etc. I'm going to do a little bit of that, but I'm going to cover exactly what I've been looking at and what I've been interested in, which is a little bit of what's in the S&P 500, a little bit what's not in the S&P 500. Um, I want to go over airlines first. Airlines are the biggest moneymaker that we have the potential to uh, take hold of. So right now, and I'm gonna go to. Let's start with Spirit Airlines. Um, I'm just gonna rattle these off, say them nice quick, so we don't have to waste time. Spirit Airlines 52-week high is $58, and that happened about a year ago. But in February 14th, it's 52. February 14th, its high was about $48, and just today it's at 11. So if let's say tomorrow the markets open up, and let's say the coronavirus doesn't hit for a second wind, and you bought 100 shares of Spirit Airlines for $11, and the stock goes back up to, it's probably not going to hit 48 for a couple months, but let's say it goes up to 30, you already tripled your profits, and $100 into 10 shares of Spirit Airlines would turn into $300. Just saying, it's an option. Now you could do this with a larger amount of money, $10,000 would turn into $30,000. Obviously, I don't have $10,000 lying around, so I can't do that, but it's an idea. I wouldn't suggest doing that with Spirit Airlines though, just because Spirit, if this is a long term problem, the coronavirus doesn't end just this year, and it lasts up until the next year or maybe even later. I really do suggest if you want to put a lot of money into a stock, buying a stock with dividends. So that goes on to my next point, the stock that I currently hold, which is Delta Airlines. So Delta Airlines was trading at a 52-week high of $63. And February 14th, where all the stocks have fallen, it was traded at, let me get that for you. It was traded at roughly 50, 58, 59. So yeah, it was traded pretty high. And right now it's being traded at $22 a share. I bring Delta into view just because the 52-week high is relatively close to what it was at in February. So, and usually for Delta Airlines, it is it's kind of flat. It's a flat line of a fluctuation. It's not super volatile. It's definitely a long term stock because the dividend yield on that is almost 6%. So putting more money into it obviously will make more money come out in return for each quarter. I really do suggest it if you're nervous about what's going to happen to the stock market and you want to invest though. Look into the stocks that have high yields and trustworthy stocks like Delta Airlines, and avoid stocks that are no return, like low return, and dangerous, like Spirit Airlines. Honestly, Spirit Airlines could possibly go under during this process. They are, just like all other airlines, paying for a location for their airplane on the tarmac. They have to pay for gas, a pilot, workers, etc. And they already offered cheap budget flights, and they're still flying right now at the same cheap budget flight price at actually even lower. It's like $11. Um, but they're not filling the seats. So if you're not filling the seats, you're not paying off the jet fuel that it takes to fly the plane. You're not paying off the location it costs to store the plane on the tarmac. You're not paying your pilots. You're not paying your any of the rest of the workers. So you really can't pay anyone. Um, Honestly, I don't know what's going to happen to Spirit. Obviously, the government is bailing out most of these companies uh, financially, so I think it will survive. But but if we head into a depression, it's more than likely that companies like Spirit Airlines do go bankrupt, because without people flying, um, there's no way for them to recoup their costs, and the government won't bail them out forever. But that's a dark point. We're gonna we're gonna turn to the happier points, because now I want to talk about stuff that I think has great potential. So companies like marijuana companies, healthcare company, not healthcare, health. What's the way to say it? Personal hygiene companies. Um, those have a very good potential to flip once this is all over. The reason I say that is because once we head back to a regular daily life and people are making money again and they're not worried about whether they're going to die or not, they're going to go back to doing what they usually did. And that would include hygiene, and that would include recreation. So, um, marijuana companies are really low right now. This is partially because I'm assuming that most of these places are closed right now because of the virus. Uh, no real word on that, but on the hygiene point, Smile Direct, company that I always like to talk about, it is right now sitting at about $5, and its 52-week high is $21. So I bought 4 shares. I'm not balling out. That's not a lot of money, and honestly, I suggest you buy more, but I would wait till it drops a little bit more, because at $5, obviously $5 to $21, you'd be making almost 4 times your profit, but um, you can make more. So especially since I don't think we're gonna return to a regular market anytime soon, just wait that one out. We'll keep moving. Oh, big stocks. So I was gonna talk about the 3 big stocks I think anyone should focus on. So airlines, huge. Car companies, huge, and oil, huge. Those are your biggest potential for money makers. Airlines, obviously, because the airline companies are all down. No one's flying planes right now. Car companies, because no one's buying cars right now, and no one's got a reason to go anywhere. I mean, there's more than just that, but no one's buying cars right now. And oil, since no one is driving and no one is flying, the oil companies don't have anywhere to sell the oil to. So they have huge stockpiles of oil just sitting and they have to sell it to someone. So that's why you've seen a lot of oil prices and gasoline prices drop. Just the other day, I saw gas for $1.75, which is crazy because it was $1.50 like literally 2 months ago. So, but I digress. Back to it. Oil's huge, and definitely something to look into if you're a long-term stock investor. If you're short term and you just want the flip, I would honestly say airlines is your best bet. Companies like Ford and GM, those companies are going to be long term. Oil's, of course, long term. You can make a quick buck on it, but not as much as you'd want. Airlines is where it's at if you want to day trade. And then here's my stocks that I suggest you avoid. Netflix, Apple, Microsoft, Nvidia, AMD, Intel, and IBM. Those companies, all tech related, and I obviously Apple and Microsoft are in a market correction right now. I would seriously doubt that they go any lower than they are right now. I'm gonna check what they are. Apple is at. That's not Apple. Apple is at $273 a share. Yes, that is low. Yes, that is about $50 low from their 52-week high. But I really think it's just going to flatline for a while. I could be wrong. They are coming out with a new phone, a $400 budget phone, or $399, whatever, $400 budget phone. That's kind of like the 10. So everything could change, but I think they're going to flatline at about 280. I don't think you're gonna make big returns right there. Microsoft, again, in the same line as Apple, is in the market correction. Its 52-week high is like 190, and it's right now 170. So it's a $20 lower than what it was. It's probably just gonna sit there at 170 for a long time. Nvidia, tech stock, don't buy it. AMD, tech stock, don't buy it. Intel, tech stock, don't buy it. IBM, tech stock, don't buy it. Those stocks are not going to go up, and they're not going to go down, because it really doesn't matter, because people are going to need the chips and the processors regardless of what virus is going on. Even if the market goes into a Great Depression, I feel like the tech stocks are going to be reliable. That being said, if you're looking for something really reliable and stable, your tech stocks are where it's at. I could see the oil going down farther. Airlines definitely decreasing. I think airlines might be at the bottom of the barrel right now. I think they can't go any lower. If they go any lower, they will go bankrupt. That's my thought. But definitely look into that. Look into the airlines. Look into the oil companies, and they're definitely something to look into. Recreational companies like Aurora Cannabis, great company to look at. Definitely worth noting that those companies right now aren't receiving as much business as they usually do, and included in that Smile Direct. So look at the recreational companies, look at the companies that people can live without, and those stocks will be low. And as soon as people can go back to living their normal lives, they start to remember, oh, I kind of want dental care, or oh, I kind of want to get high. So those are the companies that are going to do well. Yeah. Thank you everyone for joining Stock Talk. I will try and host another Stock Talk before the semester ends. Sorry, everything's been kind of hectic, and I'm sure it's been hectic for everyone else. And thank you for watching. Have a good one.